What is it telling you, Larry?
Well, I try not to overanalyze it because as of yesterday, the 10-year yield was in the tightest range since 1979 for an entire month. So the fact of the matter is, yeah, we did break new highs for 2019, but the range has been very narrow. You consider both 10s and 30s are up maybe 10 to 11 basis points from the start of the year. It's not really that much. It's more of a reset, in my view, as just like the stock market rallying 11% for the year. It's like a reset to the fundamentals.
That's interesting. So when I spoke with Byron Wien, he thought that we don't see the 10-year over 3%. Your thoughts on that?
Yeah, I definitely could see it. I'm not betting on it. I'm actually betting, that the curve goes flatter, that we're going to see continued buyers of duration whenever there's dips, and that's what we're seeing right now. I mean, in my mind, like, yield should be higher if all this is true with global growth and with the trade deal, et cetera, but there seems to be a lot of penchant for buying the dip. So theoretically, sure, it could go above 3%. I just don't think so.
And and he actually said to stay below 3%, just to be more clear. So the flattening yield curve, which was the big concern, right? Your thoughts on that spread between the two going forward in the month ahead or the next 6 months?
Yeah, I mean, not impressed. I mean, just given all the good news that's come out, I mean, not the data, but just the pivot from the Fed, et cetera, the curve really hasn't steepened a whole lot. The 210, I believe, started the year at 16 basis points. I think it got up to 20 yesterday, but closed today around 18, 18 and a half. So if we're in such a pro-growth environment, you'd think that spread would steepen.
Right.
And in my view, it's not very impressive.
When you think about the Fed, which has been obviously a little more dovish lately and on a pause at the moment, and we're talking about the unwinding of the balance sheet and that they are going to slow that down as well, and the central banks around the world, the global story, how does that factor into the bonds that you're looking at? Yeah,
I mean, it factors in a lot more than any of us, at least me, I could, a ton, because they can only, 10-year and 30-year duration can only go so wide away from JGBs and German bunds and gilts, so forth. And so, for us to have a meaningful move one way or the other in the long end of the Treasury yield, we need to see something really good happen overseas. And I think that's part of the reason why volatility is so low here in the U.S. and why we've been so range bound.
When we talk about bonds, I mean, we don't just have Treasury bonds. There's all kinds of bonds. So there's some bonds that you think are going to be more lucrative for the year 2019 over others?
I think there's going to be less issuance going forward, especially with the balance sheet rundown, which we don't know all the details. But with that said, I think there'll be a lot more demand for some higher quality municipal bonds. I don't give recommendations. I don't even take my own recommendations sometimes. But I think there's going to be a lot more demand for that to stay within reason of your risk parameters.
Mm-hmm. And what else are you thinking when you look at 2019? I mean, what's going to be the one thing that we may be missing?
I think the one thing we might be missing is, hey, how about if global growth does in fact inflect higher? I don't think people really think that. And
nobody's thinking that to actually have good global growth, Larry. You're unbelievable.
Yes,
I love your optimism.
But just think with me. If we see China inflect higher, not just stabilize, but inflect higher, the pass-through effect to Europe is unbelievable. And I think that's been paralyzing Europe so much, especially last year when we saw China slow down a little bit. So that with the fiscal measures they've taken there, if there is an inflection higher, it will cause Europe to grow, and then therefore it's off to the races again. But it might just be a dream, but I think that's what a lot of us are missing.
Listen, anything can happen, Larry. I don't disagree. I mean, we're sort of in this space where we're sort of steady at the moment, right? Growth is a little slower. I mean, we're not seeing this awful trajectory. I mean, maybe for China, we've seen the pullback, but everybo's sort of in this steady Eddie phase at the moment. So maybe it can go any way.
Yeah, it very well can. I mean, we all know less than nothing, and that's the bottom line. And so It's just one of those things we have to think creatively and continue to be diversified, but realize that China could very well inflect higher, and that would impact Europe, and therefore it would help the U.S. with making that next move in the stock market.